Look, starting a business is hard enough, and the last thing you have to be worrying about is paying bills, payroll, late paying customers, or anything relating to cash flow that's going to stress you out. Here in the next few minutes, I'm going to share 5 cash flow rules that make sure you always know what's coming in, what's going out, and what's safe to spend in your business. And these are rules you should be following in your entire journey in business, even if you're starting today. My name is Adrian Rubio, and I partnered up with a fractional CFO firm that helps out hundreds of new clients every single year. And throughout my journey of working with this firm and helping businesses myself, I've come to find that there are only 5 rules that you should be following in cash flow, and most owners aren't even following a few. So here, let's dive into it. So the first rule you have to follow is that profit doesn't equal cash flow. Let me explain. Look, at the end of the day, profit is just the numbers on paper, but cash flow is the actual money that's in your bank account. Making money on paper doesn't actually mean you can spend this money. Let me show you. For example, let's say your business is a service-based business and you help out a client for whatever it is that you're doing, but you charge them $5,000. And you're like, hey, I did this job for you. I'm going to charge you $5,000. And the client's like, okay, great. I'm going to pay you back in 60 days. And now, since that's your first sale, on paper, that means you made profit. But in reality, you have no cash in the bank yet because you have to wait until the client pays you 60 days later. So hopefully this example distinguishes the definition of profit and the definition of cash flow. But if you're like, Adrian, I don't want to be waiting 60 days in order for me to get paid. Well, this depends on whatever your service is. Some services might take longer, some services might take shorter. So it all depends at the end of the day. But there are a few things you're able to do to reduce this 60-day term. For example, you can set payment terms. If you're like, no, instead of paying me in 60 days, you have to pay me in 30. You have to pay me in 15, or you have to pay me all in upfront cash right now. Or if you don't want to do that, you can at least ask for a deposit down. So instead of paying me the $5,000 upfront, you can just pay me $1,000 right now and pay me the $4,000 within the next 60 days. This alone makes sure that you have cash available right now for you to reinvest in other things in your business instead of waiting 60 days. Because for me personally, I don't like waiting to get paid. As soon as I get the service done, that's when I want to get paid. Hey, so before I dive into the next step, I did want to let you know that in the description down below, I have a few free guides that help you out with the financial system in your business. So if you're interested in like making a lot of money, I say you go down into the description and go download some of the guides. Back to you, video Adrian. So the second rule is that timing is everything. Look, cash flow isn't just how much money you're receiving, is when are you actually receiving that money? Because let's say we go back to that last example and that client did not pay in 60 days. They were like, I'm actually going to take my time because Adrian hasn't told me anything about me not paying him. So I'm actually going to take 90 days. The longer you wait to actually get paid and get cash flow moving into your business, it's going to begin to cripple the operations within your business. So for example, let's say you did the service for the client already and they're like, hey, I'm actually going to pay you everything up front right now. And you're like, yay, finally, I'm able to reinvest into ads, marketing, my sales team, and anything else that can allow me to produce more revenue into the business. If you don't know what revenue is basically the total amount of money your business has accumulated. But let's say the client wanted to pay 60 days later, like I mentioned. It's always better to try to get paid the most amount possible upfront in your business in order for you not to lose momentum and begin to struggle when you're trying to cover bills. So if you feel like you're struggling with this, one thing you're able to do to fix the entirety of this problem is, like I mentioned before, shorten the payment windows as much as you can. Begin to use deposits, upfront payments, shorter terms. You can find multiple different strategies, but it all depends on what type of business model you're running. So rule number 3 is to track inflows and outflows. Tracking basically means recording every dollar that's coming into your business and every dollar that's going out of your business. I've personally seen many owners who just rely on memory of when they're getting paid or when they got paid, and that's when mistakes begin to happen all across their business. So here I have 2 different examples of business A who's tracking the inflows and outflows, and business B who's just kind of doing it from the top of their memory. So because business A is tracking all their inflows and outflows, they basically begin to make smarter decisions because they know exactly where they stand financially. And business B just kind of keeps everything in their head like, oh yeah, I got paid from Tommy $50 yesterday. Oh, but I still have this bill coming up tomorrow. And because our brain can only sustain so much information, it's better to write all of this down, because if not, you're going to end up like business B and get surprised every single day with probably different payments. So if you feel like this is something that you're personally dealing with, or you want to add into your business by just tracking the inflows and outflows of every dollar that comes in, this is super easy to do. You can use QuickBooks, Google Sheets, Excel, or just write it down on pen and paper, figuring out what's coming in and what's going out. So not only will this give you more clarity, it will make your financial statements way more accurate. And the more accurate they are, the better decisions you can make. And if you don't know what financial statements are, basically your financial statements are the entire finances and health of your business. And when you begin to look through them, they become a guide telling you what's working in your business and what's not working. It's basically a cheat code for growth when you're running your business. So I highly recommend that you learn how to read some of your financial statements. Rule number 4 is to separate business and personal finances. So mixing both your business finances and your personal finance can create tons of chaos in your life that is going to stress you out. Because of you mixing both of these up, this will create a bigger liability when it comes to your taxes. So when it comes to tax time, you need someone to file your taxes. That's when you go to a CPA, and the CPA is going to say, okay, great. What are all the expenses you've used to run your business? And when he asks you this, you're going to be all confused because you haven't been tracking your business and personal finances separately. So you might pull out the list and see a Netflix subscription, the rent for your office, the new carpet you bought in your house, basically all your expenses jumbled together, in which will create a headache for you by not having everything separate. And because of this, you might lose more time, more money, and it will just complicate the whole process of filing your taxes. So if you feel like this is something you're struggling with, I got a simple solution here for you. What I recommend is that you open a separate business bank account, which will allow you to track your business expenses and leave your personal expenses to the other bank. Not only will you get the bank account, but you will also get a new credit card or debit card, which allows you to track each transaction there separately. This in general will save you lots of time and stress when it comes to filing your taxes or just analyzing any numbers in your business. And rule number 5 is to forecast ahead of time. Forecasting means estimate the future money that's coming in and out of your business. The goal is to look forward on what money is coming in and what money should be coming out. For example, you know that rent is due every month, so that fixed expense, should be accounted for the next 60 to 90 days. And you also have a client who pays $500 a month for whatever your service might be every 15th of the month. Both the money that you know is coming in and the money that's going out should be added into the forecast. That way you have more clarity of your finances ahead of time. So if you feel like you haven't added this to your business, I recommend you build a 30 to 90 day forecast, which I've provided a spreadsheet down below that you're able to use. But in general, the more clarity you have of your finances, the better financial decisions you're able to make, which creates faster growth in your business. So with forecasting, you can grow your business without any surprise shortages. So here's a quick little recap. First rule, profit doesn't equal cash flow. Second rule, timing is everything. Third rule, track your inflows and outflows. Fourth rule, separate your business and personal account. And fifth rule is to forecast ahead of time. And if you master all 5 of these rules, I promise you, you will never wake up surprised when you look at your bank account. I included some free guides down below for anyone who's able to make it to this part of the video. For example, the cash flow forecast template, I included it down there. I included another guide called the Full Financial System Guide for businesses under 500K, which basically gives you the full financial system and everything you need to know for your business if you're under $500,000 in revenue. And me and my team are currently running an offer that we guarantee we could find $10,000 in savings in your business within 7 days. And if we can't, we donate $300 to a charity of your choice. So if you're interested in that as well, go ahead and book an appointment with us down below. But other than that, I hope you guys noted down all of these 5 rules for your business, whether you're new or you're a veteran business owner. Enjoy.